Gold, in fact, has been managing to sparkle above that $5,000 an ounce level, and that's something that you're seeing, which is a very crucial level. Let's also try and get you a sense of what the key tailwinds here are, what the triggers from here on are also going to be looking like. In fact, on the show right now, we do have Ajay, Kedia, Director, Kedia Advisory, joining us. Mr. Kedia, a very good afternoon to you, and it is a very good afternoon for gold as well right now, because it's broadly managing to keep up that $5,000 an ounce level, stay above those levels, and we've actually managed to claw back some of the losses, at least that we did have in those two sessions where you saw that massive plunge come in for silver, but even for gold.
First of all, good afternoon, Tracy. First of all, as January month has started, everything was going very fine. We have seen gold, silver prices was carried the factor what we have seen in 2025, geopolitical tension, trade tension, ETF buying, or we can say central bank buying. Everything was going fine. But all of a sudden, we have seen the volatility has started moving, and with the rise of margins, we have seen there was a sharp correction of 24, 25 odd numbers for gold and around 45% for silver. And that volatility and margin spike, what it has done, leverage money or speculative money was out of market. And that is why since last couple of days, we have seen market is now shrinking its range and stabilizing. In case of gold, yes, we have seen a level like 5,600. We have seen the level like 40 to 4,300 level also. But now prices are getting some support on the sense of US and Iran trade tension. No doubt from the Fed also there is a hope going on that in the month of March there won't be any rate movement, or we can say steady movement would be there despite two rate cuts are still possible, we can see in 2026. But I think the gain has been seen purely because of risk which is coming from US and Iran. So maybe we can see some type of consolidation between 4,900 to 5,200. But overall sense seems to be if this de-escalation comes, then definitely a profit booking of second round would be there for gold. But as of now, 4,900 to 5,200 is going to be an important range for gold.
Absolutely, and that's a very big range that you're also looking at right now for gold. It's been a very interesting last few days as well. And of course, you did have that plunge ever since then. It was very important to try and chart out if that recovery can be scripted. Do you think that, after that stumble that we saw coming in those two sessions where you did have that 13% plunge coming in, do you think that gold has managed to regain footing from here on? And are you expecting that range-bound trade at least to continue?
First of all, the volatility is been wiped out in the market because of margin hike. So we don't expect whatever the momentum we have seen in Q4 2025 calendar year, because at that time speculative money or we can say leverage money was there in the market. Now the volatility would be there, but on the fundamental side. So I think because of higher margin, we don't expect whatever the amplified effect was been seen in Q4 would be there. But yes, with the given geopolitical risk, we may see prices moving to the level of 5,200, but not beyond that, because gold has been habituated from last 3 years that Russia, Ukraine, or US, Venezuela, or it could be Iran or Israel. So I think the geopolitical side has already been discounted. So maybe we can see a level like 5,200, but beyond that, it should not hold. Things have been maturing in 2026, whatever the factor up till now we have seen.
All right, so just to be on the same page, Mr. Kedia, are you saying that the geopolitical risk premium, at least when it comes to gold, has been largely wiped out? Is that what you're saying?
Yeah, because see, Russia, Ukraine is not a new thing. We are being carried out from March 2022. Only US, Iran has to come down, and up till now, since last 6 months, because last year also there was a conflict between US and Iran where we have seen US has fired 3, 4 missiles. But now I think it is on the verge. Once it is out, then definitely the war premium will be would be taken out from here. So I don't expect from this point it could be more supporting for gold. It could be around 100 to 150 point from here, but not beyond that.
And what about silver? What's the outlook that you have? Are you expecting it to also be trading in similar ranges given that it's a system metal, or do you think that it's managed to chart out a system of its own right now?
See, right now to track silver, better way is to track gold silver ratio, which has made a low of 43.80 in the month of Jan. 2026, and now it's currently trading at 61.62, heading towards 72, which suggests gold would be outperforming silver. And that has been very much clear with the US and Iran tension going on. Gold will be at least stable. But in case of silver, yes, market has taken a support at $70 mark, which is very crucial. And on higher side, maybe a jump towards 88, 90 would be possible. But I don't think from here, as ratio is suggesting that it can go up to the level of 70, 72. That means silver has to underperform gold. It could be because of geopolitical tension which is going on, which will support gold more rather than silver. Or if things get mature, then there will be a sharp correction in silver. So maybe volatility would be there, but the range could be, let's say, previously we were expecting 70 to 94. Now it could be reduced to the range of, let's say, 76 to 88. So slowly and steadily, we will see in silver also the range would be shrinking.
Well,
And
absolutely.
even
Right.
China market is going to be on holiday from 15 of this Feb. That will definitely impact more on volatility side for gold and silver also.
Well, absolutely, and China is a very important part of this entire puzzle when it comes to silver as well. But one quick question that I had for you in terms of the investors who've already bought in when it comes to gold and silver. Of course, there was a lot of FOMO buying that we saw coming in, right? So if somebody's already bought in, be it through physical gold or silver, or be it through ETFs, what's the advice that you have for them right now? And how should they be looking at gold and silver as a commodity right now?
So first of all, suppose somebody has bought a couple of years back, or let's say 1 year back, he has got a very fabulous return. He should book at least 25-30% of all lump sum and continue to be there with the SIP format, so that if there is in next 4 to 6 months, if prices get down or settle down, then he can re-add the quantity. But somebody has bought in the month of January under FOMO, I think you have to wait for another couple of years to get back that level. See, gold and silver long term is always going to be on a positive side, but a return like 300% in a 1 year for silver and more than 100% in gold is a fancy return. So I think now don't expect this type of return is going to be in 2026. We can see positive return, or we can see even negative return also, but don't expect whatever the returns in 2023, 4, 5 we have seen. So I'm slightly bearish on gold and silver for 2026, or other way we can say, comparing with the other asset class, gold and silver should underperform in 2026.
That's a very sobering outlook that you have when it comes to gold and silver. Let's see how that really pans out, because these are two metals that have actually managed to surprise investors on both sides, albeit. But, that's the view coming in. So if you've got FOMO buying, patience is the key here. That's the word coming in. Thank you so much, Mr. Kedia, for taking time out and joining us.